as companies race to lead the narrative. But taking the lead costs a lot of money. Amazon, Meta, Microsoft, and Alphabet are expected to spend around $340 billion this year alone in building out data centers and developing products. Our next guest is concerned about that spending, writing in a recent op-ed that the massive amount of money being spent poses a hidden risk to the economy. The Wall Street Journal chief economics commentator Greg Ip joins us now. Greg, it's great to have you here on Overtime, and let's start right there. Why is this a hidden risk?
Well, those sheer dollars being spent are just like a huge prop to the economy right now. For example, in the first half of the year, the economy grew about 1.2% annual rate. Half of that came from information processing equipment investment, and that was by and large data processing, and all that's AI related. So if something were to happen to this AI boom, then I think that would be a very negative sign for the economy. But secondly, I mean, for the stocks themselves, right? I mean, there's a lot of hope and assumption going into the valuations being assigned to stocks and anybody with exposure to AI. And the kind of spending they're doing can only be justified if they start to put up profits that are commensurate with that investment. And it could happen. Smart people say it will happen, but it's not happening right now. And you're seeing that basically in the big drag on cash flow that this CapEx has created. And when you see a kind of like a divergence between free cash flow and net income like we're seeing now, I think that people need to be a little careful.
We've also talked about, though, Greg, this AI investment halo and some of these other names that aren't the mega cap tech players that have been benefiting from this huge spend that we've been seeing over the last couple of years. And it has shown up in those companies' earnings and free cash flow numbers in some cases as well. And it comes at a time where you are talking about reindustrialization and more infrastructure spending and more manufacturing here in the U.S.
Right. So I think that, I mean, for those of us old enough to remember the dot-com boom of about 25 years ago, there are certain sort of like echoes, right? And at the time, anybody who literally put .com in their name got a halo effect. And I think it's important to remember that the dot-com boom or the internet revolution, it was real. All that broadband cable that got laid really did advance the internet and made us more productive, and it was good for economic growth. It was, but in that competition to provide services, it kind of competed away all the margin. And I think that's what I would worry about right now. There's so much money going into AI, and there's so much competition. It feels like somebody comes out with a new model every week or two. It just strikes me that these are difficult conditions for anybody to be able to claim with confidence that they're going to be able to have a kind of a moat around the business, a sort of moat that generates consistent, strong profits, the way, for example, Windows does for Microsoft or the iPhone does for Apple.